Are you 67 or older and wondering how the latest August 2025 age pension updates in Australia affect you? Stick around, because this might be one of the most important financial updates for retirees in years. From the amount you can now receive every fortnight to the income and assets limits that determine whether you qualify for a full or part pension, to the new rules around eligibility age, everything has shifted just slightly, but in ways that can make a big difference. By the end of this video, you'll know exactly how much you could get, how the changes work, how you can position yourself to make the most of the support available. Right now, from 20th of March to 19th of September 2025, the maximum age pension for a single person is $1,149 per fortnight, which adds up to almost $30,000 a year. For couples, combined maximum is $1,732.20 per fortnight, which works out to over $45,000 a year, $866 each. These amounts include the base rest, the pension supplement, and the energy supplement. For some long-term recipients still on transitional rates, the amounts are a little different, but the main story is that these payments have all been indexed upwards thanks to a 2.4% increase applied in July. That means your fortnightly payment is higher than it was just months ago, and the next review will happen again in September, which could see another increase depending on inflation and wage growth. Of course, receiving the age pension is not just about your age and whether you apply, it's about passing two important tests. The first is the income test. For singles, you can now earn up to $218 per fortnight with no reduction at all. For couples, that free area is $380 combined. Once you go above those amounts, your pension reduces. For singles, every dollar above the threshold reduces your pension by 50 cents. For couples, every extra dollar reduces the combined pension by 25 cents for each partner. The pension cuts out entirely when income reaches $2,516 per fortnight for singles and $3,844 for couples. These limits are higher than they were earlier in the year thanks to that same 2.4% boost. There's also the work bonus to consider. Lets pensioners earn up to $300 per fortnight from paid work without it counting towards the income test. For many, this means that casual shifts, part-time hours, or seasonal won't cut into the pension as quickly as you might expect. And if you don't use the full work bonus in one period, you can bank it for later, which helps people who work irregular hours or only during certain months of the year. For those on transitional rates, the income rules are even a bit softer, with different taper rates and higher cut-offs, sometimes allowing singles to earn up to $2,580 or couples up to $4,191 before their pension cuts out. The second major test is the assets test, and this is where many retirees pay close attention. Your home does not count as an asset, but almost everything else does: savings, investments, cars, valuables, and valuables. As of July, if you are a single homeowner, you can hold up to $321,500 in assets and still receive the full pension. If you're a single non-homeowner, the limit is higher at $579,500. For couples, the limits are $481,500 for homeowners and $739,500 for non-homeowners. Once you go above these thresholds, the pension reduces. For every $1,000 of assets above the threshold, your fortnightly pension is cut by roughly $3. That means if your assets are well above the limit, the pension can be significantly reduced. The cut off for a part pension is much higher: $704,500 for a single homeowner, $962,500 for a single non-homeowner, $1,059,000 for a couple who own their home, and $1,317,000 for a couple who do not. For those on transitional rates, the thresholds are even more generous, with single homeowners allowed up to $636,500, couples allowed up to $990,000 as homeowners, or $1,248,000 as non-homeowners. It's important to understand that Centrelink applies whichever test reduces your pension more, the income test or the assets test. So for some people, like a retiree with modest income but higher assets, the assets test will determine their payment. For others, like someone with low assets but high part-time earnings, the income test will apply. And sometimes both play a role at different times in life as your circumstances change. Let's bring this into a real-world example. Imagine John, single homeowner with assets valued at $525,000. That's above the full pension threshold for singles, which is $321,500. The difference is about $203,500. At $3 cut for each thousand above, John's pension is reduced by around $610 per fortnight. If he also earns income, Centrelink will check if the income test or the assets test produces a lower amount, and that's the one they'll use. But with the work bonus, he could still do some casual shifts without affecting his pension much further. These changes are not just numbers on a page. They matter because they open the door for more Australians to qualify for a pension or to qualify for a larger amount than before. That's the impact of indexation. It doesn't just lift the pension rate, it also expands the thresholds. So someone who may have been just over the limit before July could now be eligible. For instance, a couple with assets around $1,050,000 might have previously been excluded, but with the new higher limit of $1,059,000, they could now receive a part pension. Another critical update is the pension age itself. As of August 2025, the qualifying age for everyone is now 67. This completes a long process of gradual increases that started years ago. If you are applying for the first time, there's no more phasing. It's simply 67 for everyone. So what does this all mean for you? It means that if you were close to the threshold, you may now qualify for the first time. It means that your fortnightly payments are slightly higher thanks to the 2.4% rise. And it means that the age pension remains a crucial support for millions of Australians, making retirement more secure. But there are also strategies that can help you make the most of it. Some retirees choose to invest more in their home, which is exempt from the assets test, rather than leaving too much money in accessible savings. Others carefully plan gifting within the allowed Centrelink limits. Some couples shift assets into superannuation if one partner is below pension age. These approaches can make the difference between qualifying for a full pension, a part pension, or none at all. To summarize in plain terms, here are the key numbers you need to remember. Singles can get up to $1,149 per fortnight, couples up to $1,732. You can earn up to $218 as a single or $380 as a couple without affecting your pension. Off is $2,516 for singles and $3,144 for couples. For assets, single homeowners can have up to $321,500 for a full pension and $704,500 for a part pension. Couples can have up to $481,500 for a full pension or $1,059,000 for a part pension with higher allowances for non-homeowners. And the age is now 67 across the board. Now, I want to ask you directly, does this change make a difference for you or someone in your family? Are you newly eligible because of the higher thresholds? Or are you seeing a bump in your fortnight payments that helps cover more of your bills? Share your experience in the comments. I'd love to hear how these updates are impacting real people. If you found this breakdown useful, make sure you hit like, subscribe, and ring the bell so you don't miss future updates. I'll continue to cover government payments, retirement planning tips, and the policies that shape your financial security. These small percentage changes may not sound like much, but when you add them up across a year, they can mean hundreds or even thousands of dollars in extra support. Thanks for watching. Take care of yourself, and I'll see you in the next video.